In Q3, the Tesla team achieved record vehicle deliveries globally, showing strength and growth across all regions, while also achieving record energy storage deployments across the residential, industrial, and utility sectors. This strong performance resulted in both record revenue and free cash flow generation in the quarter. We continue to launch new products that excite our customers across automotive and energy. We launched the Model Y L and Model Y Performance and further expanded our vehicle offering with the Model 3 and Model Y Standard, our most affordable vehicles. We also unveiled the Megapack 3 and Mega Block, which will further simplify large battery installations by reducing cost and time to deploy. We believe our scale and cost structure will enable us to navigate the shifting market dynamics across the globe more effectively than our peers, with advances in AI making our products the most compelling in the market. Our focus remains on scaling our core hardware business by maximizing our deliveries and deployments, as these products will deliver increasing value to our customers over time via services powered by AI. Every Tesla vehicle delivered today is designed for autonomy, while every Tesla energy storage product is capable of being enhanced and optimized by our virtual power plant or autobidder functionality. We continue to deliver a fleet of products that brings AI into the real world as we pursue a future of sustainable abundance as outlined in our Master Plan Part 4. While we face near-term uncertainty from shifting trade, tariff, and fiscal policy, we are focused on our long-term growth and value creation. We're prudently making the necessary investments in our business, including future business lines that we believe will drive incredible value for Tesla and the world across transport, energy, and robotics. As far as some of the financial summary goes, total GAAP gross margin is up 0.8%. Total automotive revenues, $21 billion. Energy generation at $3 billion. And services another 3.4. Operating margin of 5.8%. So a little bit of a boost there, 1.7%, 170 basis points or so. Adjusted EBITDA of 15% margin, which kind of came in from the previous. If we look at the financial summaries, what they say for pluses: increase in vehicle deliveries, growth in energy generation and storage, growth in services and other, and then the things that have hurt them: lower regulatory credit revenue and lower one-time FSD revenue recognition year over year due to Q3 24 releases related to Cybertruck and certain features such as Actually Smart Summit. Profitability: increase in operating expenses driven by SG&A, AI, and other R&D projects. Increase in SBC, stock-based compensation and restructuring. Lower regulatory credit revenue. Lower one-time FSC revenue recognition year over year as described above. Higher average cost per vehicle due to lower fixed cost absorption for certain models and increase in tariffs and sales mix, partially offset by lower raw material costs. And then on the plus side, growth in energy generation and storage gross profit, increase in vehicle deliveries, and growth in services and other gross profit. I think the Roadster status is design development now. Cybercab and Tesla Semi, I think both said construction from last time. And the Roadster still in design development. Let me go down to the outlook real quick. Volume. It is difficult to measure the impacts of shifting global trade and fiscal policies on the automotive and energy supply chains, our cost structure, and demand for durable goods and related services. While we are making prudent investments that will set up our vehicle, energy, and other future businesses for growth, the actual results will depend on a variety of factors, including the broader macroeconomic environment, the rate of acceleration of our autonomy efforts, and production ramp. We have sufficient liquidity to fund our product roadmap, long-term capacity expansion plans, and other expenses. Furthermore, we will manage the business such that we maintain a strong balance sheet during periods of uncertainty. Profit. While we continue to execute on innovations to reduce the cost of manufacturing operations over time, we expect our hardware-related profits to be accompanied by an acceleration of AI, software, and fleet-based profits. We continue to evolve and augment our product lineup with a focus on cost, scale, and future monetization opportunities via services powered by our AI software. We remain focused on growing our sales volumes through a differentiated and efficiently managed product portfolio, which includes leveraging and optimizing our existing production capacity before building new factories and production lines. Cybercab, Tesla Semi, and Megapack 3 are on schedule for volume production starting in 2026. First-generation production lines for Optimus are being installed in anticipation of volume production. So that's cool to see. We began deploying V14 of FSD Supervised in October, bringing a large portion of the robotaxi FSD model to consumers, plus improved handling of several complex scenarios such as avoiding road debris, yielding for emergency vehicles, and adding arrival options to indicate where FSD should park. We expanded both our service area and fleet count for our robotaxi service in Austin and launched our Bay Area ride-hailing service. These efforts help refine our robotaxi service by providing valuable real-world data that will allow us to quickly scale to other cities in the future with our universal model. We announced a deal to manufacture advanced semiconductors for AI inference and training in the US with Samsung, and further expanded our AI training compute capacity, bringing Cortex to a total of 81,000 H100 equivalents.
Nick, what is this confuses me. It says bringing Cortex to a total of 81,000 H100 equivalents, but then it says Tesla AI training capacity ramp through end of September. H100 equivalents is 120,000. So there's like a 40,000
delta. Where is it?
It was on that page 8, the end of section 1 there. It says bringing Cortex to a total of 81,000 H100s. Yep. And then the chart there to the bottom right is
That's
different.
120,000.
Yeah.
So that means they got 40,000 elsewhere.
Where else would they have it?
Well, so there's two other things that they have. They have Dojo, that's in Buffalo. And somewhere they have a whole bunch of AI4 chips that are racked and stacked and are, running basically training in simulation or validation in simulation.
Yeah, well, I think Cortex is in Austin, right?
Yep.
And then the rest of the training was being done in California, right? That's where Tesla AI headquarters is.
Yep. Okay, that'd be interesting. So between Buffalo and somewhere else, they've got a whole nother 40,000 H100 equivalents.
Yeah.
There's not much in here.
Well, there's a couple things.
nothing.
So, I'd say the biggest one that stands out that I think we were expecting, but $5 billion increase in cash.
Oh yeah, sure.
People are thinking, Tesla shouldn't do a buyback. They keep accumulating cash.
Wait,
Yeah.
I thought it said
Despite spending nearly $10 billion a year on CapEx.
From a financial perspective, this company is a very, very strong position. The balance sheet is like rock solid. They added $5 billion in cash from the second quarter, so they went from $36 billion in cash to $41.6 billion.
Mm-hmm.
And this is after accounting for, like you said, all R&D, all expenses, build outs, ramps. So they're being extremely capital efficient.
They're investing in their business, and they still cash grew by that amount.
Yeah.
I
And
think it
inventory is about the same too, quarter over quarter.
I think it's important to internalize the significance of they're willing to put $5 billion down to the balance sheet. I think there's a couple of things going on there. Like, where could they put that money? Obviously, Elon could be buying more GPUs. So why is he not buying more GPUs if he thinks that that's going to accelerate it must not accelerate FSD or Optimus in a significant way if he's not doing that. That's an interesting takeaway. But also I think it says a lot about, they mentioned it here in the deck, that they do see a lot of choppiness in potential market, I think both in the domestic US market and internationally.
Yeah.
Interesting.
I don't think it's a call on how many GPUs, because they do have Cortex 2 on the way. So and they got approval on the HVAC and the permitting for it. So I think they'll be kicking that into high gear. So as soon as that building's ready, they'll be throwing them in there. I wonder if in between they'll rent some compute from XAI.
Yeah, or Oracle or Weave. Yeah. Yeah, because I don't think XAI has any. It seems like the play so far is that all of the compute that XAI has is just for training, and that even XAI then goes to Oracle for any inference needs. And so I don't think there's any extra capacity just laying around there. So I think it would, if they're going to get anything, it would probably be go get on the phone with Larry and get some.
The EPS came in at 39 diluted. What is it, 52 cents adjusted?
We were expecting in the 50s for non-GAAP earnings.
What's the stock doing, Nico?
it's down about 1%.
Okay, so it's kind of surprising. I would have thought the stock would have gone down a lot more. Based on
It will once we start talking.
the decrease starts now. In the comment section, let us know what you think of this earnings so far. It is early. We've only had it for 10 minutes. And you know what's another thing of note here? So Tesla always has an outlook.
Normally there's an outlook section. Last quarter it said volume, cash, profit, and product. Now they're just, that slide does not exist.
No, that slide does exist. It's page 10. But for some reason, I thought there was another section in the bottom. I was wrong. I had it wrong. So if I go to the Q2 one, the page looks the same. It's just they've changed the verbiage from quarter to quarter. So like the Q2 verbiage was, our focus remains on prudently growing. It's plans for new vehicles that launch in 2025 remain on track. Our purpose builds robotaxi, Cybercab will continue to pursue a revolutionary unbox process. And then they changed their verbiage in Q3 where they said, we continue to evolve and augment our product lineup with a focus on cost, scale, and future monetization opportunities via services powered by AI. And then Cybercab, Tesla Semi, Mega Pack 3 are on schedule for volume production 26. First generation production lines for Optimus are being installed in anticipation of volume production. So this is new. This is actually, I mean, this is pretty material. If you're like a long-term person looking at the bot, this is pretty significant because this is sort of the TAM that we all think is going to be significantly bigger than the car business. And Tesla has started to say, hey, we are installing the production lines for Optimus. So, that is material. I would say that's a material statement from the company. It's just like, what are the chances that the broader market actually believes that the human or robot will actually start appearing in volume? You know, we were talking about 10,000 units doing whatever work. If we think it's going to be next year, I don't know if the first generation production lines are going to be ready to actually get us there by next year to have 10,000. I would guess this is more of a 2027 or 2028. First generation production lines for Optimus are being installed in anticipation of volume production. So volume production is going to be late next year at the earliest, if I were to guess, for Optimus. So we'll see. It seems like there's not much in the deck at all, and it's just going to be the call. And the call will dictate what happens.
I've been telling you guys, earnings don't matter. They don't matter anymore. The deck makes me think Elon's going to come out here, feisty.
All guns blazing.
Sell our stock. You don't believe in what we're doing. Like, I think we might get that, Elon. This deck feels like, I imagine Elon has to review the deck before they, I imagine. I don't know. Yeah. Maybe not. Maybe he doesn't. It feels very much like it's deck where Elon said, I don't care. Just do whatever. And they're like, oh crap, if Elon doesn't look at it, we're going to be very conservative. I don't know. It feels, I'm with you. Something feels different and not in a great way.
Feels like they've pulled back on the hype. Okay. So, and here's the thing. I actually have a contra take on this. Usually when Elon wants people to pay attention to Tesla and he's like, yo, just let me get you excited because we have things coming. Mm-hmm. He goes hard. When he stops hyping, that's when shit starts to happen. I've seen that happen before. You know, with Model Y, it was super subdued, right? Once the stock starts running like crazy, it's too high. He's like when things are going well at the company, he steps back. When things need a little bit of help or needs a little bit of hype, he's at the front. The thing that I can't stop thinking about now, it's like, V14 is very hard to ignore. Mm-hmm. And then you have that happening with this whatever thing. Like if you really wanted to create hype, you'd be like, yo, FSD V14 completes intervention-free drives in Boston, New York City, etc. If you really wanted to hype up what's happening at the company. But instead, it's like a cognitive dissonance of sorts, or like some sort of bizarro world that Tesla's in right now, which is the product is doing incredible things, but they're not even saying it. In a place where they should be telling investors, look at how amazing our company's doing. They're like, yeah, little section about FSD, like to your point, FSD V14 is doing this, and it's just this little block. And then the rest of the pictures are just like, look at how cool our new cars are, right? Look, we have a cheaper Model Y now. Oh, we have a performance Model Y. Look at how pretty the light bar is, Oh, 3 rows. Whoa, 500,000 cars out of Gigafactory, Texas. Oh, look at this Tron thing great. When can I get the robot? Fantastic, right? Look at this event that happened 2 months ago. Look at these wonderful people celebrating Megapack. Oh, here's more graphs. Okay.
Let me give a counter take to that. So the head of IR puts the slides together for the quarterly deck that we're looking at. They also prepare the board of directors on a monthly basis. So they have a lot of work they do. And essentially, Travis Axelrod and his team, they're recapping the quarter. And V14 happened after the end of the quarter. So I think that's maybe one reason why they're not talking about it. But also, there might be really intricate or new ways that they're tracking V14 that they don't want to share every quarter going forward. So they may not put it in materials, but instead talk about it on the call.
That's fair. So so the deck itself is not really geared for us. The deck is geared for another group. And then the call is geared for us, for the psychos that are seeing what's happening. And we actually want to know what the hell's going on. I know in the past, the deck has usually been a little bit more, a little bit more forward looking, but they on purpose pulled off guidance on this, like very, very strategically, just with the verbiage they've used, how they're framing the conversation, just a very cautious tone. And it could be, some of that could be because they pulled the EV tax rate in the US, of course. And the softness in the US economy, outside of AI, nothing's growing. AI is the only thing that's growing, that's keeping up at GDP. We're seeing layoffs happening. We have a Fed that doesn't want to lower interest rates as much as it should. You have Europe and China. China still hasn't gotten out of its funk. Europe is Europe. It will forever be Europe. So yeah,
I do think it's somewhat interesting that we got pictures of stuff that didn't happen in Q3, like the standard Model Y.
Oh, that's true.
And Model 3 happened after the end of the quarter performance. So we did get a few pictures of stuff that happened after, but still no mention of FSD. But also, obviously they knew that they were going to be releasing this. So this is easier to prepare before the end of the quarter versus, when is FSD V14 going to roll out? I don't know. It's going to roll out when it rolls out.
This is such a brilliant summary. Summary is basically they're still doing what they've been doing, LOL. Yeah, pretty accurate.
What's everyone's reaction so far?
I want to hear yours.
Everyone was scratching their head at how the numbers could be so bad. This is actually pretty close to what I was forecasting. So it's clearly a miss. I haven't done the full detailed line by line item, but my first take at looking through these numbers is they're reasonably close to what I was assuming. I think my revenue was a little bit higher, so I need to dig into that. My revenue is a little higher, so there's a bit of a miss on the revenue. So I'm assuming ASPs were a bit lower than what I had been assuming. Probably that translates into some gross margin pressure that I wasn't assuming. But really, a lot of the line items from credits to energy margin was very close to where I assumed it would be. So there's not a whole lot of surprises in here from my first glance.
That's kind of like what we were talking about, and the crew can step in at a time. They're being very purposeful on the guidance. They are being very soft on saying, hey, we have a lot coming. They're pulling back a lot of guidance. They keep saying that we're going into uncertain times. We're not really sure what's going on. The biggest breakthrough they've had, which is V14, which is an unbelievable product that's doing crazy drives in New York and Boston, is like an afterthought. And they're showing pictures of just whatever. So it's my takeaway is you have unbelievable things happening with a company from a technical perspective, but you're not even bothering to mention them on the deck. So the deck is this boring thing. And, they added $5 billion of cash while, Bradford's point was they added $5 billion of cash while investing in R&D, building out, their lines, coming out with new products, building out the cybercab line, and they're still adding $5 billion. Oh, great.
So they've got $42 billion of cash on hand. Ford's market cap is 48.
How crazy is that?
That's wild.
Geez.
For all those people who were, saying, it feels so vividly yesterday, the 2019, how could Tesla ever be worth, more than all these other auto companies combined? Meanwhile, they've generated Ford's market cap in cash in the last, 5 years, basically. And this is before robotaxis have taken off. They've done this while cutting prices and refusing to advertise and really not delivering on any of the promises that we were super excited about 5 years ago. So yeah, this is why this company is worth so much.
Pretty incredible. I mean, that's such a good framing of it. Go ahead, Nick.
How much, all right, I'm going to sound so stupid here, so bear with me, Matt and Bradford, but just out of curiosity, I know Ford and GM, they carry a lot of debt. Mm-hmm. And I guess a lot of that probably has to do with their financing arm. But yeah, when you look at the valuation of the company, let's say the company just sold today for its value, what's the real value with the debt? Like how would that work out?
So that's called enterprise value. So if you add the market cap plus the net debt, so the debt minus the cash, because the cash is inherent in the market cap, so you don't want to double count it. But when you do that, Ford's enterprise value is $171 billion. So, that's maybe a more apples to apples comparison, but Tesla, because they don't have any debt to speak of, it's all their market cap is essentially their enterprise value.
Got it. Thank you.
To Matt's horns, Matt and I with Rebellionaire, we do cover calls on a near weekly basis, but we're really anxious about selling them on an earnings week because the stock can go up 20% on earnings or more. But we had a conversation. Matt said his number was closer to mid 50s. And we thought that wouldn't really propel the stock much higher if that's the case. And, that's the number we got. We ended up doing cover calls this week. I'm not going to say which ones we did or whatnot, but we took a little bit of a risk thinking that it'd be a pretty boring week. Let's see what the earnings call brings, though.